We're going to talk about what is likely to happen in the stock market tomorrow. But first, take a look at Tesla actually printing green today, up 4.25%. We come over and we look at the yield curve. We need to pay very close attention, all right? We have a lot of troubling signs out here in the stock market. When the yield curve comes back up and uninverts, that's when terrible things are going to happen in the stock market. We come over and look at the NASDAQ. We look at the heat map. What do we see? A sea of red with a sprinkle of green here and there, but overall, a very bearish day. We look at how the indices fared. The Dow was 81 points. The NASDAQ was down 160. The S&P 500 down 27 points. The Russell 2000 up 2.67 points. Now, something that's a little bit fishy is the fact that we had more advancing issues than declining. We had 62.8% of issues advancing with only 33.9% of issues on the decline. And I want to warn you guys about something. This is very important. This is very troublesome. And that is the fact that if we come over here and we look at any chart, and we're just going to look at the SPY on a 5-minute chart, when you see the market dumping going into the close, this is one of the characteristics that happened back in 2008. And you guys have probably heard my trading war stories from back then when I absolutely got slaughtered every day. You get a little bit of hope. Woo, we're going up only to come back down, closing near the lows of the day or making new lows as we go into the close. We look at the fear and greed index today. We are sitting at 41. We are back in the fear territory. Now, is the pendulum about to swing all the way into extreme fear? Because as we come over and look at the investor sentiment survey, we've come substantially off the previous week's reading. Previously, 52.7% bullish. This week, only 43.2%. So are more people starting to wake up to all the warning signs out there? We come over and we look at this article right here. Corporate insiders are dumping stocks at the fastest rate in more than a decade. Now, we look at this chart right here. This red line represents the 10-year average. Now, look at where we are now. This is the lowest level that we have seen going back to 2014. It's not even by a small margin. It is substantial. The next closest time we had was back here in 2020 when we're in the midst of the pandemic. And right now, I still see the NASDAQ on the move lower. Let's not forget as well, we still have a lot of earnings to contend with. So we're going to see next week is going to be very critical, especially on the earnings front. And speaking of earnings, yesterday Ford had earnings come out, shares on pace for the worst day since 2008. If we look at a stock chart of Ford real quick, yikes, one massive gap on the way down 18.36 points. Now, some people might say, well, we got to fill the gap, right? Maybe not just yet. All right, let's see how much trouble there really is out there. Then we come over and look at some of the news that we had today. First decline in 5 months for core durable good orders. And when we look this morning, durable good orders came in minus 6.6, previously 0.1. Now, to me, it doesn't sound like we have a thriving economy out there. To me, it sounds like we are on the verge of something very bad. Now, we look at this article right here. When everybody says AI is going to be the new, the great, and everything about it, well, even Google is suffering from AI. OpenAI announces a search engine called Search GPT. Alphabet shares dip. Now, let's go take a look at Google real quick. Most people say, well, AI is going to help out Google. In this case, not so much today. Google was down 3%, and that news out there from ChatGPT actually is not helping Google. So not only are workers going to be replaced, will ChatGPT be able to replace Google as well some point in the future? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, if we come over and look at the sectors across the board, you can see it was kind of mixed. Communication services definitely leading the way lower, but up there at the top, we had energy, industrials, both up 1.11, financials, also a strong day as well. And it's basically split down the middle in terms of sectors in the green, sectors in the red. And we come over and look at the dollar index be able to eke out a small little gain. And if you look at this, after the news came out this morning at 8:30, dollar index rose on the way up, came back a little bit, and then started to rise once again. Now, a stronger dollar is usually problematic for the market. Then we look at the 10-year yield. 10-year yield today was actually down slightly. However, it did print a green candle. Now, if the 10-year yield continues to rally on the way up, that's going to be very problematic. And if we even come over and take a look at gold real quick, look at gold. Not only did it suffer a pullback due to contract rollover, but also had a very nasty day out there. Now you can see we're right in the thick of that profile that I talked about, but I was really looking for a bounce right around the 61.8. Now the question is, are we going to make it to the other side of this distribution? If gold makes it there, watch out, because we're probably going to come back in to this minus development area. And then at this area, I would look for some type of bounce up and out of that area. So the first time we come into the minus development area, let's see if we get a reaction, maybe it bounce back towards this high volume area. And then if we come back again, we'll likely flush lower, trying to come back and test some of these high volume areas that we have on the price chart. Today, coming over and take a look at the volatility index, the VIX was up once again. Yesterday, the VIX closed up over 20%. Today, the VIX was up 2.66%. Now, yesterday, I warned you guys, when the VIX closes up 10% or down 10%, then within the next 2 days, we're likely going to have an adverse reaction. So the VIX being up yesterday, now it's up today. Will tomorrow be a day where the market bounces? Fridays tend to be more bullish than bearish. However, when we enter a bearish phase, some traders may not want to hold stocks over the weekend. We come over real quick and take a look at the diamonds. Diamonds, basically a shooting star type of candle, but it's in the context of a downtrend. This could be a part of a reversal pattern on the way up. However, it is the weakest of all reversal patterns. Then we come over and look at small caps real quick, a very similar pattern, but you see small caps are holding up relatively well. We take a look at XLF. XLF had a very similar candle today as well. And then we look at KRE. KRE was able to push through a new recent high in the market, but however, it was unable to close at those levels. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You can get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now this morning, if you guys were watching NVIDIA, you can see the selling tail on this candle. I saw NVIDIA down more than 6% at one point. It closed down 1.75%. And if we measure from the closing price down towards the low, it was down roughly another 5.25%. Now, is this the low for NVIDIA? Will NVIDIA start to bounce? And if you look left, look what NVIDIA was able to do. It came all the way down over here, closing the gap. But when we look right below us, we have another gap down below us that could be problematic. Also, SMCI today having a buying tail on the bottom of that candle as well. Then we look at Microsoft absolutely getting destroyed, down another 2.43% and down again after hours. We take a look at Meta. Meta today also suffered a pullback. However, we have a little bit of a buying tail on the bottom of that candle. So the question is, has the market gone too far, too fast? Because as we look at the NASDAQ, we're almost at that ABC projection that we've been talking about at 454.53. Now, if you look at the MACD indicator, it absolutely looks horrible out here on the daily chart. And on the 4-hour chart, MACD indicator does not look any better at this moment. On the 1-hour chart, though, you can see things are starting to try to firm up on the MACD indicator. Now, this morning, I said that MACD indicator was starting to firm up. We did get a bounce, but now we have come down once again. And I do think a bounce is right around the corner. We come over and look at the 30-minute chart, and now you can see the MACD indicator is already starting to try to push away from these lows, and it's gonna be important. Can we go ahead tomorrow and start rotating back up through the volume profile levels? You can see value area low down here. We close below it. So tomorrow, if we are above that price point, we can start looking for higher prices in the market. Then as we come over and look at the futures markets real quick, look at that last 4-hour candle, a big red nasty candle. But in this morning's video, which I drop a video each day before the stock market opens, where did I tell you we were likely going to get a bounce to? Right here towards this high volume area. And that's exactly where we came to. We actually overshot it by just a little bit, meaning we started to get back into the minus development area. Boom, rejection on the way back down. And boy, oh boy, did it reject. We come over here and we zoom this chart out. We also want to be mindful on the composite profile. If we look at the area that has the most amount of volume, that's going to be all the way down here at 18,553. Now, I do think a bounce is warranted some point in the near future. The question is, will it be tomorrow? We come over and look at the 30-minute chart. What do we see? Well, we did go down. We had another day where we had a 500-point range. Now, the last 2 days, I have had to expand out my ATM strategies, meaning my stop losses and my targets to accompany the higher volatility. But this is going to be critical. If this wick down here can hold tomorrow, this is going to be tonight and tomorrow. That is going to be critical. We are likely going to get a bounce. If it does not hold, watch out. We're likely going to go substantially lower in this market. It's very clean, very simple. You can see we're starting to put a buying tail on the bottom of this candle. And if you look, we're able to take out another point of control that was left behind from many weeks ago. You can see all the way back over here. Now there is another point of control below us at 18,598. Now the question is, will we start to bounce? And if you look at the volume profile levels real quick, we closed below value area lows. So what's my MO going to be? I'm going to be looking to target this area tonight. So if you join me on the live stream, I am going to be heavily focused on this area. Value area low comes in at 19,095.00. The point of control will come in at 19,190.00. Value area low will come in at 19,294.50. So I know normally I say if we're trading below value area low, look for lower prices. But when we close outside of value, regardless, if we were to close above it, I'd be looking for a short. But because we closed below value area low, I'm looking to play back in towards value area low. And no, it does not guarantee that trade is going to work out in my favor. Now, tomorrow, before the market opens, is going to be very critical as well. You can see at 8:30 a.m., we have the core PCE price index. This is going to be the Fed's preferred measure of inflation. Is this going to give Jay Powell what he wants to see in order to start cutting interest rates like the Fed watch tool is projecting? Next Wednesday, they're not expecting a rate cut, but as soon as September, you can see the market is pricing in aggressive rate cuts moving forward. Now, is the market going to be disappointed? Because at the beginning of the year, they're pricing in 6, 7 rate cuts this year. And here we are in July, and we haven't had one rate cut yet. Now, as we come over and look at the SPY, notice we came right down towards 539.22. We overthrew it a little bit. So the ABC pattern to the downside has already been completed. And where do we come to? Right into the minus development area. This is an area on the volume profile where I expect some type of reaction in the market. We'll see. Do we get it or not? One thing that does concern me is the MACD indicator. It's showing the momentum to the downside is very bearish at this moment, showing no signs of firming up. On the 4-hour chart, the MACD indicator looks horrible, showing no signs of setting up. And if we flush to this minus development area, we do want to watch this area at 534.58. That would be the next target location to the downside for the SPY. On the 1-hour chart, though, we can see the MACD indicator is trying to firm up down at these levels. And the question is, do we flush the lows one more time before ultimately starting to try to get some type of bounce in the market? On the 30-minute chart, the MACD indicator, you can see starting to set up a divergence. Now, is this just going to be a measly little bounce, or will it be more meaningful? Similar to what we talked about with the NASDAQ, we are closing below value area low. So tomorrow morning, if we're trading above that price point, guess what? I want to be on the side looking for higher prices. If we're trading below it, I simply want to be looking for lower prices in the market. It's very simple, if then syntax. Now, we come over and look at the S&P 500 futures markets. What do we see? Well, this morning, where did I say if we start to get a bounce, watch for this high volume area to come into play? And that's exactly where the market came to. Boom, rejected down. But not only was it high volume on the composite profile, if you look to the left, you can also see it was a minus development area within the weekly profile. And I forgot to mention that in this morning's video. Then we rejected and came right back down to where the edge of this minus development area, right near this high volume area. We start to bounce up again. Is it really far-fetched to think that we could rally back up there again tomorrow, especially that tomorrow is Friday, and Fridays tend to be more bullish than bearish? Out here on the daily profiles, notice we're closing below value area low, which comes in at 5455.25. The point of control will come in at 5465.75. Value area high will come in at 5503.25. So how do I want to play this? Well, tonight I am going to be actively targeting value area low, and this low right here from today. I want to see, do we flush it? Are there stop loss orders sitting below that level and then they run it back up? That is something I want to watch out for. If that's going to be the case, I want to go hot and heavy on that trade, and you guys will probably see that tonight on the live stream. But so if we break the low from today and then we start coming back up, all aboard, I'm going to be looking to target value area low, point of control, and then we'll see, can we target this distribution area here and even value area high, and maybe even start to push for a more substantial retracement on the way up. Also, if we pull a Fibonacci retracement from swing high all the way down to the swing low, look what we did today. We came all the way up to the 50% retracement. Now, is that all she wrote? And I warned you guys, the S&P loves to retrace the 50% retracement, and that's exactly where we came today. Now, is this going to be a little double bottom and we come back up? I kind of have my sneaky suspicion we're going to flush the low. At least that's what I'm hoping for. And then we'll see, can we buy it back up on the way up? Keep in mind, to the downside, if we do start to break lower, not only do we have this high volume area over here, we have an untested point of control that is substantially lower that I do not think is going to be in the cards for tomorrow. If it is, we have a lot more problems out there. That's 52.73. But to the downside, on the composite profile, we can look to target any of these high volume areas on the way down, assuming that we are flushing below the low out here from today. So from below the low, I want to be looking for sell side trades, or I want to sit on my hands. Ideally, I want to see us flush the low, get back up, and then look for long side trades. Now, if you guys want to see how to trade volume profile using order flow, watch this video right here.